pure inflation, right, in its purest form. And so all it's going to do is make prices go up, especially gold prices. Once the government, just officially recognizing the obvious. Yes, the gold is not $42 an ounce. That's obvious. It's almost $3,000 an ounce. And so just revaluing it doesn't matter. But if the government takes advantage of that by having the Fed print $800 billion so they can spend it, then the price of gold is going to be $4,000 or $5,000. And then what happens if every time the price of gold goes up, they ask the Fed to print more money, right? So they can spend that too, right? It's going to be a self-perpetuating spiral.
We present the clips of Peter Schiff's latest video. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Another thing that I've heard discussed on television recently, financial press, is the idea that the U.S. government with Scott Bessent, they want to revalue America's gold and market to market. And that would increase the value of our gold by about $800 billion. Now, what they're talking about is that now that the U.S. government's gold was worth $800 billion more, that they would get the Federal Reserve to just create the $800 billion and give it to the government. And I guess the Fed would take the gold as collateral, or I don't know how they want to structure this deal, because they're not talking about the government selling the gold to get the $800 billion. They want the Fed to just create the money out of thin air and give it to the government to spend, just deposit it into the general account of the U.S. government so we could just spend the money, right? And somehow this is supposed to be a new source of funds that's going to be good. It's just inflation. That's all it is. It's like QE, where the money is directly injected to the Treasury. It's not going through the banks. And then the Treasury spends it right into circulation. So it's pure inflation, right, in its purest form. And so all it's going to do is make prices go up, especially gold prices. Once the government, just officially recognizing the obvious. Yes, the gold is not $42 an ounce. That's obvious. It's almost $3,000 an ounce. And so just revaluing it doesn't matter. But if the government takes advantage of that by having the Fed print $800 billion so they can spend it, then the price of gold is going to be $4,000 or $5,000. And then what happens if every time the price of gold goes up, they ask the Fed to print more money, right? So they can spend that too, right? It's going to be a self-perpetuating spiral. Look, the only thing that makes sense with revaluing our gold reserves is if we go back to a gold standard, and we need to have a gold price at which we can back our currency. And that is a price in the tens of thousands, many tens of thousands of dollars an ounce to do that. Or if we want to use our gold to pay down our national debt, we need to devalue the dollar dramatically. Because even if we sold all of our gold, if our gold is not even $1 trillion and we use it to pay off our national debt, we wouldn't even pay off, 4 months worth of it? We got the numbers that came out today for the Treasury. They came out with their statement for the monthly deficit. Look at these numbers. So for January of 2025, the expectation was for an $89.9 billion budget deficit. These are the official numbers, right? The actual national debt grows by more than that because all the off-budget stuff isn't even recorded in these official numbers. So they were looking for $89.9 billion. We got $128.6 billion in 1 month. It's a 40% increase in the prior month, but year over year, it's a 500% increase. The budget deficit in January of 2024 was $22 billion. It's $128.6 billion in January 2025. What does that tell you is likely to happen for the rest of the year? 2025, I think, is going to be the biggest annual increase in the national debt in history. But the record won't last long because we're going to break it in 2026, right? Doesn't matter about what DOGE cuts. I'm tired of hearing DOGE is going to solve that. DOGE is going to fix that. There are certain things that DOGE is going to do. Expose corruption, maybe put some people in jail, people who have been getting rich, right? The head of DOGE saw her net worth go up by like 20 something million in the last 3 years. Where'd she get all that money? Is she some super genius investor? If so, she should have quit her job and run a hedge fund. No, it's obvious. People that worked at USAID, right, when they come up with $50 billion, $100 billion grant to some cockamamie organization in Bangladesh or whatever, they get kickbacks under the table, right? That's why they're funding this stuff. I'm sure millions of dollars are coming back into their pockets. And who knows, maybe some of it even got kicked up to the big guy. Who knows how this criminal organization, my father called it the federal mafia, and that's what it is. It's a criminal organization. There's a bunch of crooks in the government. That's why they're upset at what Elon Musk is doing, shining a light, because it could shine on them. I mean, some of the people who are protesting the most probably are the most guilty, right? They don't want to end up in jail, right? So yeah, we might get some good stuff there, but it's not going to derail the train that's headed off the tracks. So you've got to protect yourself. Criticizing Trump, and the Republicans spend all their time criticizing Biden this, Biden that, right? But nobody is dealing with the actual problem, the debt, the ticking time bomb. Again, he keeps saying that the debt isn't a problem, but the path is. He says we're on an unsustainable path. Well, but that means the debt is a problem, because the debt is on that path. I mean, you can't really separate the debt from the path, because look at the path, right? It's continuous and it's growing exponentially. And we can't wait until we get to the point where, there's a crisis. I mean, that's basically what Powell is talking about when he says that we're on an unsustainable path, but we're okay right now. So again, you jump off the top of the Empire State Building, and on the 50th floor on the way down, you're on an unsustainable path. But clearly, you're headed for disaster, right? You can't say it's, I don't have to worry until I hit the pavement, because once you splat on the pavement, that's it, right? There's nothing you could do, right? So according to Powell, we don't have to worry about the unsustainable debt because we're not on the pavement yet. We only have to worry about it when we have a full-blown crisis. Well, no, by then it's too late. You can't do anything about it. You have to worry about the problem when you can still do something to fix it. You can't just say, well, we don't have to worry about it because it hasn't blown up in a complete unmitigated disaster yet, right? Well, by then, it's too late to do anything. You are done. So he should be doing everything he can to get us to do the right thing now, which would be hiking interest rates and warning about what's going to happen. But no, he doesn't do any of that. People kept asking him, what do you need to see before you start cutting rates? Nobody said, well, what do you need to see before you start hiking rates? Nobody talked about the potential for rate hikes. And in fact, Donald Trump himself set the stage even before we got the CPI numbers. He came out and said, we need rate cuts now. He said, we need them to go along with the tariffs. He said, it's time for America to rock and roll, rock and roll with rate cuts. We can't have rate cuts. Trump campaigned to get rid of inflation. Well, we want to get rid of inflation. We need rate hikes, not rate cuts. We need the Fed to pick up the pace of its quantitative tightening, but it's not going to do that. And in fact, the Fed talked about how it's going to continue to do that. He was asked again about QE or when might they do that. And he pointed out, well, we only do that once we get down to the zero bound. And he said, so we're not at the zero bound. And I thought they might, break from that recent tradition, because I know there's going to be a lot of upward pressure on long-term interest rates. Once they get above 5%, the 10-year hits 6%. The only way the Fed could, put some brakes on that without sharply increasing interest rates, which they don't want to do, would be to go to QE. But I don't think they want to slash interest rates to zero and then go to QE. So I think the next time they do quantitative easing, it's not going to be when they're at the zero bound. They're going to do it well before. I don't think we're going to be able to reduce rates to zero in the face of this high inflation. They were able to do it when inflation was below 2%. It's not going to go below 2%, even if we're in recession. In fact, the recession is going to be caused by rising inflation and rising interest rates. And so they can't cut rates anymore. Again, that's why stagflation is not one of the scenarios that they stress tested, because all the banks fail. And that's why they have no contingency plan. That's why all they can do with respect to stagflation is hope it doesn't happen, because the Fed knows that there's nothing in their playbook for stagflation, right? It's game over. And so they just want to, close their eyes and hope it doesn't happen.
The push to revalue gold is gaining attention as a potential way to ease the burden of soaring government debt. With new tax and spending measures expected to add trillions to the national debt, some analysts argue that adjusting the value of U.S. gold reserves could provide much-needed financial relief. By revaluing gold to reflect current market prices, the government could significantly improve its balance sheet, making its debt appear more manageable. This shift could also enhance the debt-to-equity ratio, potentially giving policymakers more flexibility in managing fiscal challenges. Supporters believe such a move could create more room for spending while avoiding politically difficult measures like tax increases or deep spending cuts. However, many analysts caution that this strategy carries significant risks. A weaker dollar could help boost exports, but simultaneously, the U.S. aims to maintain its position as the world's leading reserve currency. Two goals that may be at odds. If multiple countries start engaging in competitive currency devaluation, it could lead to heightened volatility in global markets and undermine confidence in fiat currencies. Some experts warn that this trend could accelerate discussions on a broader monetary reset, potentially reshaping the global financial system in ways that are difficult to predict.